With the clients that you have today, what are the main problems and use cases that you see local stablecoins addressing?
So we really do think that every company is going to become a FinChain in the future. Like if you believe that blockchains are better rails for moving value, if you believe that on top of that, stablecoins are almost like those containers to move that value in a way that typically what tends to happen is you try to replicate what already exists with newer technology. You can also basically work with us to do payouts to your bank accounts and then third-party payouts. And that was really the moment where
Hello, everybody. Welcome to another episode of Frontera, the podcast where we analyze what's happening in crypto in Latin America. And we keep talking about local stablecoins. Today, we have William Duran, that is the co CEO and co founder of Minteo, a company that specializes in local stablecoins in Latin America, starting with the market in Colombia. And also, today, we published an analysis about Minteo. So go and subscribe to our newsletter. We're making the best crypto content about Latin America in English. So you should read our essays. And Will, my friend, how are you, man? How's everything going?
good, you're good. How's everything on your end?
Doing great, man. So thank you for coming. And I've wanted to have this episode for a long time. And first of all, I'd love to hear a little bit more about you, about Minteo. Could you tell us your story in crypto and how you started Minteo, please?
Yeah, of course. Thank you. Thank you for having me. For me, it was actually through Ethereum, and more specifically, it was actually through Aave, which at the time was called Ethlin. For me, it was fascinating when this project launched because to me, it was like the first real like utility case that I saw on crypto, and really that's basically what drove me to explore further into the types of things that you could do with crypto. Um, so for a long time, I was just kind of like speculating, trading, reading about crypto. Until eventually I partnered up with my co-founder, co-founders Santiago and Javi. They had just finished, basically selling a payment gateway in Colombia called Wompi, which is the biggest payments gateway in Colombia. That's over $7 billion in payments. Sold that to Bancolombia at the end of 2021, and we basically, just sat around one day and we're like, guys, like, we like payments, we like finance, we like crypto. What should we do? And really, that was the first time we seriously considered doing something in crypto, right? So it's actually funny because we basically just we sat around at Santi's apartment. We're like, hey guys, like we need to build something. We originally thought of building an exchange, and we really wanted to be inspired from Coinbase because we really thought that even though there were exchanges at the time in Latin America, and, this was what, 4 years ago, we really liked the way that they approached it, which was very clean interface, focus a lot on compliance, a few tokens, but kind of like good market cap tokens. And we thought, let's bring this to LATAM. Let's make it very easy for people to buy and sell crypto. Originally, we thought that was the best idea. We didn't end up executing it. We actually ended up applying to Alliance DAO, which is basically the YC of crypto, great program. And then it's funny because like the way we pitched it to them was like, guys, like we don't actually know what we're going to build, but we have a lot of experience building ramps, on ramps, off ramps. We understand crypto. We like crypto. We want to focus on building infrastructure, and that's really how we got started. We launched an NFT marketplace, which was pretty wild. Looking back, it's like it sounds a little bit insane, but our whole theory was, Latin American culture is very different from US culture and other cultures. We're not a huge investing culture like the US, where everybody has Robinhood accounts and everybody's buying Circle stock and Coinbase stock and Tesla stock. And we're also not really a saving culture like in Europe, right, where everybody's kind of looking to basically invest in a very conservative way or get yield from their savings. But really, we thought LATAM is huge on culture, on music, dancing, art, and that's essentially why we launched the NFT marketplace. We were like, okay, well, the way we get people onto crypto is through experiences. And then after that, we can potentially sell them on different kind of financial services, have a built-in wallet. And that's kind of what we did. But obviously, that was an idea that we had. And then we ended up ultimately pivoting the business, on one end because the market crashed. And I think, the negative side of the NFTs, which was the speculative side, just came crashing down. And then two, in that, that entire process, we learned a bunch of things, and we realized actually the potential of having local stablecoins.
I remember that we met in Mexico maybe 2 or 3 years ago, and
Yeah.
we were discussing about the different opportunities that they were like in the market. And you were telling me that you were talking with some B2B clients, and I remember saying you like, why are you talking to B2B if you're doing NFT? So it was really an interesting time, and I would love to understand what did you see in the market back in 2023. You did this
Yeah.
adjustment from NFTs to local stablecoins. What was that market hint that gave you that nudged you to basically move the business and focus in local stablecoins?
Yeah, so I think I think basically was we were closing we're doing the NFT marketplace, and then we're closing a deal with a company in Colombia called Payroll, and they do a bunch of concerts, kind of like Coachella, Lollapalooza, but in Colombia, Stadio Picnic. And what ended up happening was that you would think that the big issue was like, okay, we're getting these people to tokenize their tickets, and they're going to tokenize like VIP tickets. And actually, that wasn't even the biggest issue. It was the fact that like when we were closing the deal, we told them, guys, that you have to tokenize this, but the way it gets tokenized, it has to be priced in USDC or USDT. Which was for them, it was just absolutely crazy. They were like, "There's no way that we can do that because one, we're gonna have a bunch of like media backlash, customer backlash. Like, it's a festival that's been running for like over 10 years, and we're gonna start pricing this to users in basically US dollars. That's not gonna fly." And that was more from like the communication side. But then on the actual financial side, they said also that there's a bunch of problems with like treasury management. Like, how are we gonna pay our local providers? Right? We have a bunch of local providers. If we have this in a USDT wallet, we have to bring this down to local pesos. We have to manage FX risk. There's no like basically like financial derivatives to protect us from currency fluctuations. And that was really the moment where it's like, oh, damn, like you know I think if we want local use cases to take off, if we want this to become kind of if we want LATAM to get onto blockchain rails, crypto rails, we need to figure out a way to actually build liquidity at a local level, and we need to actually plug into the local economy, right, with the local currency.
Yeah, that's something that we've been analyzing a lot. And in one of our recent essays, we did this analysis that there is this big trend of on-chain effects, right? And when you think of on-chain effects, it doesn't make a lot of sense to have effects just like 50% of the effects happening on chain. That would be like USDC. You need to have both assets in order to have a more liquid market, in order to have more efficiency, also to reduce how do you source liquidity. Centralized ways of sourcing liquidity are super expensive. Market makers or exchanges or broker dealers are great businesses because they can capture they have big moats until you have tokenized assets like local stablecoins. And now that you've been through this, like the idea maze, now you've deployed the Colombian peso stablecoin. With the clients that you have today, what are the main problems and use cases that you see local stablecoins addressing?
Okay, so I kind of see it there's like in my mind there's two different stages, right? So I think one of the first stages is like what you were saying about around like FX and really cross border enablement, which is actually kind of where we come in, right? Which is like, okay, we are that on chain pair to the US dollar, and I think it works very well. We're starting to build liquidity, but then I think at the end of the day, like, yes, we serve as almost that counterparty to the US dollar. Our product, for example, is like integrated in a way that we can actually do third party payouts. We can disperse this to like local bank accounts all over the country, and same thing with pay-ins, right? With the flows going from pesos through COPM to USDC or USDT, and then to dollar accounts. So I think we're a nice fundamental piece there. And we work with like all the ecosystem players, whether it's like OTCs, on-ramp infrastructure providers, off-ramps. But to me, that's only half the equation, because I think really, kind of what excites me is having people and build companies around this entire new technology stack, right? So actually, we have a word for it in Intel, and we like to call we like to call them fin chains. So we really do think that every company is going to become a fin chain in the future. And like what we mean by fin chain is, it's essentially fintechs that are building on public blockchains and using on-chain infrastructure to build other products. And to me, that's really where it gets exciting, right? When you think that a lot of companies that have built on banking as a service models are now starting to actually look and see, okay, maybe instead of taking a year, 2 years to launch a financial product, why don't we, I don't know, integrate BitGo as the infrastructure and wallet provider, and then plug in COPM or some of these local stablecoins, into the product, USDC, rain cards or Pomelo, and really kind of build, you can actually kind of build even an entire bank using kind of this new stack. And to me, that's kind of the exciting part, because I think, cross-border is something that everybody's been like, identifying, something that's pretty obvious now. But I think where you really actually end up creating a mode and locking in, all these different kind of, use cases is by becoming an enabler for these companies to actually build on top of you, right?
Yeah, I completely see it. This meme that happened some years ago of the DeFi mullet, like fintech in the front and DeFi in the back, the way
Mhm.
that you call them finchains makes a lot of sense. And I think that there has been a lot of tries to do that in Latin America and other parts of the world, but we didn't have. There were several problems. So you addressed a couple, like the infrastructure provider with BitGo, Fireblocks, or maybe it can be through a non-custodial wallet using something like Portal or
Mhm.
Privy. And one of the main problems of these models were on and off ramps, because if you don't have a way to do, uh, then again, manage liquidity between the local currency and the assets on chain, basically you don't have any business. In the first iteration of local exchanges like the Bitsos, like the Mercado Bitcoins in Brazil, basically the whole model was around obtaining and owning that liquidity from Mexican peso to USDC, or that liquidity from Brazilian real to USDT, that, for example, Binance does that great in Brazil. And I completely see that local stablecoins they open the floodgates for this type of fin chains, as you call them. And also, I would love to talk a little bit more about other use cases, because we talk about those use cases as crypto natives, and definitely it's super exciting. But that you dedicate your whole life, you're dedicating your life to build this, all of your time, your bandwidth, your uh, all of your brain power. So I would love you to help us understand which are like some industries that might not be crypto native today, that you see implementing stablecoins, local stablecoins, because I think local stablecoins are not something intuitive for people around, well, for people in the US or Europe, because they say, why would you need like a Mexican peso or a
Mhm.
Colombian peso stablecoin? So, what are the first industries that you see implementing processes over local stablecoins like COP-M?
Okay, yeah. Well, before answering that question, I think, just want to say something that I think is also relevant, which is like, I think at the end of the day, like, philosophically, if you believe that, blockchains are better rails for moving value, if you believe that on top of that, stable coins are almost like those containers to move that value in a way that, that makes sense. And then a lot of this is happening with US dollar liquidity, like, by essence, you have to do that locally too, right? And at the end of the day, it's going to become like an integrated economy. So what I actually think is going to be kind of this next stage is that before we actually get to a lot of these like crazy new use cases that we don't even know what they might be, typically what tends to happen is you try to replicate what already exists with newer technology, right? So I think that's kind of the phase we're in right now. So look, we're trying to solve like cross borders, make it faster, make it cheaper, right? I think that's the same thing with local stablecoins. I think with local stablecoins, you're going to see companies that are going to look at at their current processes, whether it's like treasury management or payroll, um, or lending, and they're going to try to figure out, okay, what can we do to actually, does this technology enhance our product in any ways? And I actually don't think it's that easy yet, right? I mean, I think actually, I'm a bit. I always say that it's funny because I think crypto a lot of times thinks that it's the answer for everything, and with crypto you automatically solve everything. And look, I think cross border is a great example. Actually, like it's actually very hard, for example, for crypto to solve cross border problems for a lot of like the Fortune 500 companies. Actually, a lot of these companies especially like the G10 economies, are extremely efficient with the way that they move money around, right? Now, that doesn't mean that there's still not like a 30-40% of the world's economies and companies and markets that are highly inefficient, right? So I think that's where I think crypto really solves these problems, and stablecoins especially solve these problems. Um, from Minteo's side and from Copan, we've actually seen some pretty interesting use cases. So, for example, we have a company uh, that basically is looking to build out lending and credit solutions using us and doing it through cards, which is pretty interesting, right? It's basically like they realize that they can shorten the cycles of the moment that the loan gets put into the person's card versus like going through like ACH cycles and dispersing this into bank accounts, especially in long weekends. So actually, they realize they can start charging interest like a day before, right? So all of a sudden now you can actually deploy that that cash faster, which is good for the company because they're making money, they're making an extra day of interest on those loans, and it's good for the person receiving the loans because all of a sudden you're basically doing a token transfer from wallet to wallet. And at the end of the day, when people are taking out a loan, they want it to be instant, and they want it to be in pesos, right? Because you're not going to take out a loan in US dollars and then have huge like FX risk and not be able to pay it back. So, and that's just one example, right? That's a company that's doing lending, but there's a ton, there's a ton of companies that are looking to do, automated payroll management, given with smart contracts, which is actually pretty interesting. Um, so yeah, so there's kind of a lot of these different use cases, but I think what is fascinating and really what I like about this is that I actually don't know a lot of the use cases, and I think actually I don't think a lot of clients know a lot of their use cases, right? They start using us as almost just I don't know, a way to move money because they realize like they can off ramp through us, and then all of a sudden they're like, hey, like maybe we can actually build an entire like treasury management pool alongside you guys and have companies manage their treasury, their Latin American treasury, with you in Colombia and with some of these other partners that we have in different parts of the region. So
Yeah, I think that, as you said, there are many use cases that you need to unveil them, right? And the only way to do so is to build around them. So different companies trying to or implementing Minteo, Copem to do the process. Also, Colombia is a really specific thing for money transfer because
yeah,
you have this really counterintuitive thing of what's it called, like 110 or 220, or what's the thing like
the
for
the cuánto por mil?
sí, 4 per mil, 4 by
Yeah,
4 by
about
4
1,000.
by 1000.
Yeah.
What's that? Because basically you eliminate that and nobody outside of Colombia understands it.
Yeah, it's it's a highly debated topic because this was a measure that was placed by government many years ago, and it was supposed to be temporary. Um, but it remains, and part of the reason is obviously they make a lot of money out of charging 4 pesos for every 1,000 pesos that each person moves. So so actually it adds a huge cost, right, and overhead to really any payment transfer. For cross borders, especially costly, right, because that's something that you actually have to factor in. So actually, a lot of cross border companies are highly surprised that they have to deal with that. And there's actually ways that you can manage that. There's exemptions that you can get depending if, for example, you can prove that the money's going into the account, but really just kind of you know going in and out immediately, and you're not holding balance there. So actually, some PSPs use it, and they have exemptions for that. So that, there's ways to navigate it, but it's still like highly complex, and it's definitely like a real problem that we deal with. So for sure, I think having on-chain transfers between wallets in many ways is a way to solve that problem. And I think, but I think it's also something that just takes some time, right? I mean, we're seeing in Colombia because we're growing. We have maybe now 30, 40 clients, and it's actually funny seeing how they start interacting with each other and kind of, yeah, I mean, even swapping between like USDC, USDT, COPM, and transacting with each other. But I think, you have to actually be able to grow the ecosystem much more than that for it to really have kind of like a full effect on the entire economy, right?
Yeah, definitely. But I mean that it's a real problem.
Yeah, it's
Nobody
huge.
wants to have it's 4 basis points, right?
Yeah,
Yeah, no, who wants to have 4 basis points? Just it's a tax. If we hate
it's a tax,
taxes,
man.
we hate unnecessary taxes like that one. And I would love to hear more about as much as you can share about those 40 clients that you have. Talking with fellow founders that are building different solutions, maybe B2B payment gateways. The other day, I was talking with a really good friend that is a founder on this industry, and he was telling me that he's starting to work with oil companies, and that
Mhm.
those balance sheets are massive. I mean, we cannot grasp the size of those clients, and that's because they need to move money around, and stablecoins are the fastest way to do it. Could you expand a little bit on what are the main industries outside of cross-border payments that you see that are more prone to use a solution like COPM? Like, I don't know, it could be something around retail, oil, travel. I don't know. What are the main industries that you see implementing this?
So look, I think it's a bit complicated because at the end of the day, um, the early adopters, the people that are going to adopt you first are really in some ways more crypto native, right? I think they have to actually understand certain complexities around crypto, be comfortable with it from regulatory standpoint and from a risk standpoint and even communication standpoint. So I think in general, like most of our clients right now, uh, you know, I would consider are a bit more crypto native by nature. But I think regardless, we are starting to see kind of more traditional companies want to implement this. So, for example, one company is like a human resources company, and they have maybe 3,000 to 4,000 employees that they constantly need to make payments to, and actually, they have a banking partner, and it's absolutely absurd because they not only have to pay for the service, but then each when they want to pay their employees, it takes about 3 to 4 days to actually make the payment, and they also have to have a reserve, that they have to basically leave as a guarantee of about, I think it's like $250,000 that they can't even make money on it. They don't actually make any interest on that. So it's actually quite crazy because you see a lot of these companies, and I would call them like kind of like middle market companies that are doing things around so like human resources or payroll management, and you'd be surprised, but they're highly inefficient. So I think when you come with these solutions, and you're like, hey, you can actually kind of tokenize your payments and your treasury in a way, and then we can kind of process all this for you through Copan and also through through these other partners. You can actually have a more efficient product, right? So I think in general, I would say like some of these companies around like payroll, human resources. I think those are quite interesting. But in general, I mean, I think in general, we still work with a bunch of cross-border companies, wallets, right? I think at the end of the day, like one of the key things of having a local currency is that that basically a lot of these wallets can can allow users to have a balance on chain without off ramping cash and losing kind of that AUM on their application, right? So it's I would say like wallets, cross-border, and really now starting to explore some use cases around kind of like payroll management.
Yeah, okay. And just understand a little bit more the product, maybe we should have started there. When a user or when one of your B2B clients holds COPM, they have a mint redeem functionality.
Yep. Yeah. Mint redeem functionality. Yep. And then you can also basically work with us to do payouts to your bank account. So and then third party payouts if you want to send to. So for example, like I think one of the nice use cases that I probably forgot to mention is actually like foreign companies that don't have local bank accounts here, don't have local entities registered, so they can actually through us essentially
Yep.
pay people here, or even kind of global companies. I'll give you an example. We don't work with them, but it's an example like Uber that basically does collections in Colombia through pesos and actually then has to move that money to US dollars, right? So that's
Yeah.
something that we can do as well.
Cool. Perfect. Man, to start closing this episode, it's been really useful to understand the market of local stablecoins, specifically in Colombia. I would love to know what are the main challenges that you're facing and that specifically COPM faces. What's the main challenge for adoption that you see in the market?
Um, So I think it's evolved, right? So I think I would have said originally was working with banks, but I think a lot of that we've been able to solve over the last couple of years, and I think we have some very good relations with banks. I would say that, for example, last year there were two things that were a bit complicated. One was liquidity. I think getting liquidity in pesos was an absolute nightmare. I think there was not a lot of market makers or really like LPs that were wanting to kind of bootstrap some of the liquidity in Colombia. I think that's also starting to change, and actually there's so many flows moving now in and out. And you're starting to get like bidirectional flows, not only from like USD to COP, but from COP to USD. So I think that's really been interesting to see in the last couple of months. And then I think also something that was like a huge problem last year was like regulatory clarity. I mean, not to say that we have regulatory clarity now, but there's a couple of projects that are being pushed through Congress, this year, right? We expect, Brazil to basically have something much more concrete around like stablecoin regulation probably by October, November. In Colombia, we're also advancing on some of these projects. Chile has a framework under, kind of like a fintech law, but we're looking to see kind of, from the operational side, what ends up happening there. But I think in general, there's just, at least there's like more of an intention of having regulatory clarity. And I think, kind of what happened to the US and the Genius Act, that's actually enabled, a lot of these governments to start thinking through, okay, we should regulate this, but it also gives companies a lot of confidence that, that this is something that the government is taking seriously, and that they should start actually now exploring potential use cases, for a launch, not necessarily now, but for a launch in 6 months, 12 months, and all of a sudden something that now it's like top of their agenda, right? So I think, I would say those are kind of like the main challenges that we've seen in the last year or so.
Yeah, completely get it. I think that as many technologies, like a lot of innovators push it through, then legislation come, and then like a broad wave of adoption comes. So excited for everything that you're building, and I would love to know, do you have any prediction on what's going to be the market cap for stablecoins, local stablecoins, in the next 10 years? Have you made that exercise?
I think, let's see. Well, so the way we always think about this is, and it's actually the way we pitch it a lot of times, and actually the way we see it. I think you have to look at the money supply, right? So if you look at the money supply, for example, like the US dollar, I think it's like over 20 trillion. And then you think of the actual penetration that, companies like Tether, companies like Circle have had. I think from the last thing I remember, I don't think it's even 1% of the money supply that's been, sort of tokenized. So, even though Tether's probably, one of the biggest companies ever or will be, it's quite insane that, we haven't even gone to the 1% of basically tokenizing the money supply. So with that said, um, I would assume that, we have to look at like what is the actual M2 of some of these Latin American coins, add up to, right? And then figure out, okay, like, if we can actually even get to the point where, in terms of penetration, right, where Tether and USDC are, I think that, roughly that should potentially give us a number. But I think, and actually it might even be more, because I think one of the things that sometimes people ignore is that, I think in LATAM, more than just like, having a currency to hold, it actually becomes a payments product, right? Which actually enables like some huge network effects, right? And it actually solves some real issues. But I would say, being conservative, I would say that, at the way that things are going, I wouldn't be surprised if in the next year or two, we're talking about anywhere from like, 15 to $30 billion just in Latam. And then probably over the next, 4 or 5 years, we should see something around like, I don't know, 100 to $100 billion in market cap, which I think is actually, I mean, if that happens and we're one of the stablecoin issuers, I would be a very happy person, right?
Definitely, that will be great KPIs to show in your dashboard.
I wouldn't mind, showing a billion or two market cap, right? So
Yeah. Good. Well, thank you for coming. It's been super fun. Then again, super easy to schedule this. And we always close Frontera. I said this insight before. For me, it's surprising this 4 por mil 4 by 1,000, like charging 4 basis points for basically transferring your money. Could you tell us another insight that you have from your market, that when you tell it to people in the US or foreign investors, they just get surprised about it?
um, I mean, I think that's one, and I think the other one is that, I think last time I read, I don't know where I read this, but basically that 97% of transactions happen in local currency. And I think for a lot of like foreigners and US investors, I mean, it's like absolutely insane. They're like, what? Why don't the US? Why don't they use the US dollar? So I think realizing that actually, the majority of transactions is on pesos is actually pretty mind blowing. And then kind of the way I always say this to them is like I tell them like, okay, do you think that in 10 years, I ask them like, what do you think is going to be worth more in 10 years, Bitcoin or US dollars, right? And they always say, well, Bitcoin, and I'm like, okay, well, why don't you just have everything in Bitcoin and then transact in Bitcoin? They're like, oh no, because I save Bitcoin and I use US dollars too. So I'm like, I tell them, well, it's the same thing, right? So like we think of the US dollar in many ways as a
Yeah.
anti-inflationary hedge and as a saving mechanism. But at the end of the day, we transact and interact in pesos. So I mean, that's typically a conversation.
That's a great way of looking at it, definitely, because something is the asset that you use to do like a reserve, to do your like savings. Another is for to do payments, and also there's a nationalist thing maybe.
Yeah.
We love the dollar and everybody wants it, but at the end, having everything on dollars feels weird. That if you go like in town, if you say, for example, I live in Mexico in a place that it's has a lot of gentrification, and if I pay in dollars, maybe people won't accept it because they need. It's a huge burden to exchange it and have Mexican pesos, and it's gonna be really hard. So yeah, completely
No,
agree with your point.
I actually have a funny story. So an investor came to visit us in Colombia, and we were having dinner, and then he got a cab, and then he was coming to the into the restaurant. He was gonna pay the cab driver, and but he didn't have any pesos left, so he was gonna pay him dollars. And then the cab driver was like, "Hey, I don't, I don't want these dollars because I don't know what to do with them." He came in to the restaurant and asked us, "Guys, like, do you have pesos?" Because he says he'll take the dollars, but he'll charge me like like twice as much because then now
Yeah.
he has to figure out what. So it's like I think and I think that's kind of the cool thing about the US dollar is that it does end up being widely accepted in basically every country, but you're gonna have to pay huge in many cases like much more than you should just because somebody now has to go and trade it and figure out what to do with that, right?
Yeah, definitely. Well, man, thank you for coming. Where can people follow you? Where can people follow Minteo?
So we have a Twitter. It's not very active, but you can follow us in LinkedIn. We're
Okay,
actually pretty active in LinkedIn. Yeah.
amazing, perfect. Well, so again, subscribe to our newsletter. We're writing the best content about crypto in Latin America. Follow me in Abraham CR in Twitter. I am active. So, dude, thank you for coming, and it's a pleasure. And best of luck. Keep growing, Minteo, man.
Yeah, awesome, man. Thank you, Abraham, for having me, and good luck with all the projects that you're always doing.
Amazing, perfect. Take care. Bye
Awesome.
bye.
Take care, man. Bye.